Hi, guys. Welcome to episode number 6 of Mind Money Method. I'm your host, Swing Pony, and we have an awesome show ahead. Jared Tendler is going to be joining us. And if you are not familiar with him, he is a mental game coach in poker, golf, and trading. So we are going to dive into all of the mental game aspects of trading and the importance of it and how we can actually embrace our emotions instead of pretending like they don't exist. So stay tuned and we will be back here in just a moment and get the show on the road. All right, guys, welcome. Got some people excited to hear from Jared. Really looking forward to this one. I am too. Can't wait. We cannot live better than in seeking to become better. Absolutely agree. We have an awesome show ahead. I'll be bringing Jared out in a little bit. If you're not familiar with him, he is the author of The Mental Game of Trading. He is also a mental game coach with poker players, golf players, and traders. So I think we all know that the mental game is half the battle, and I'm super excited to dive into all of those topics with him and how we can actually use our emotions as signals as opposed to pretend like they don't exist or just strive to be an emotionless trader. Because I know we've all heard that one a lot. And as much as we would like to just be in robot mode and make trades and profit all day, we're human. It's not realistic. So very excited to have him on and talk about all of that. If you're tuned in right now, hit the like button. Let's get those likes up. I do want to talk a little bit about what we have coming up this week. We do have a big earnings week. Personally, I am most looking forward to Monday. We've got IDEX and Roblox coming in after hours. If you're holding either of those, let me know in the chat. I'm typically not that big of an earnings person in terms of like how I gauge my trades. I'm a swing trader, based on the chart, not necessarily I'm getting in for earnings. I'm getting out because of earnings. But these are two pretty big plays that I'm a part of, and I'm eager to see how earnings affect them. In other news, we also have a very, very good looking situation with crypto right now. So I do want to talk about that. If we have any crypto fans in the chat, let me know. I know that Bitcoin right now, we're at 47K, which is beautiful. I know we have been waiting for that for a while. Ethereum's up. Cardano has been killing it the last few days. Personally, I have a big affinity for XRP, and it's been really, really nice to see that go up and hit 130 recently. Doge, 17%. That's a lot. So, somebody messaged me the other day and said, my altcoins are finally at break even from when I bought. So I think we're at a very exciting, pivotal moment with crypto between all of the ups and downs, and crypto's going nowhere, it's done, and Bitcoin to 100. So we're navigating all of that stuff like we usually do, but it's very exciting to get crypto heated up again and see what the rest of the week and the month and the year hold in store for us. So with all of that said, I do want to jump into bringing Jared on here in a second. Like I said, he's got an incredible background with golf, poker, and trading, and we're going to discuss the mental aspects that kind of carry through all of those performance-based tasks as well as everyday life. We're going to talk about using emotions as signals, mapping your patterns, common misconceptions about fear and greed, and all the things that we struggle with from time to time: revenge trading, perfectionism, trader burnout, all of that good stuff. So I'm excited to welcome Jared on. Let's go ahead and get him here. Hi, Jared.
Hey, Swing. How are you?
I'm good. How are you?
I'm doing well, thanks.
I've been reading your book, Mental Game of Trading, and it's been super refreshing. Because like I mentioned earlier, I think we are always told to shut the emotions down. They don't exist. Don't acknowledge them. If you're being emotional, like you're failing at the game. So it was really refreshing to, have somebody say, look, the goal isn't to shut your emotions down or pretend like they don't exist. The goal is to use your emotions as cues and signals and indicators and incorporate that into your trading world.
Yeah, wonderful. I mean, I think it is such a common misconception in trading, just like it was in poker when I got into that industry about 12 years ago now. I think by and large, the idea of being robotic in these intellectual type endeavors seems to be more commonplace than in sports. You would never think of the elite athletes to be robotic. I mean, we see Jordan, we see Brady, we see football players. Golfers can tend to be more stoic, but Tiger wasn't. I mean, Jack Nicklaus was a little bit, but some of the greats, they thrive on their emotions. They're able to get in the zone because of their emotions. Emotions aren't the problem, right? Excessive emotions are the problem, right? And that extends to positive emotion. You can be too elated. Some of the traders listening now will know those instances when you get too excited because you just made a ton, and then poor decision making follows, right? Because that emotion now is clouding your judgment.
And I think, like you said, so there's positive emotions and there's negative, and they can both affect us negatively. I mean, even the positive ones. Yeah.
Exactly.
Guys, if you are tuning in, hit the like button. I do want you to start thinking about some questions. We're going to save probably the last 20 minutes of the show. Any questions that you have: fear, greed, overconfidence, hesitation, trusting your gut, over trading, any issues that come up for you that you're struggling with, any questions you have, let us know. We're going to get to them. Real quick, Jared, I do want you to tell me a little bit more about your background, because I know there's golf, I know there's poker, I know there's trading, and it's so cool to apply the mental strategy across the board because I think it's very relevant.
Yeah, so I started, wanting to play professional golf. I mean, that was my dream, up and through, the latter half of my college experience. And I played a Division III Skidmore, was a 3-time All-American, won 9 tournaments. But there's a difference between playing at that level and trying to qualify for the US Open, playing in the US Amateur, big national events where your dreams are effectively on the line. And that's where I was choking. And so I kind of dove into sports psychology and got better as a player at all times, except when it mattered most. And so I kind of reasoned that, the sports psychology just wasn't able to provide the answers. And I reasoned that there must be something deeper going on. And so I thought about, therapists are good at solving emotional issues and deeper problems. I didn't think I had like deep personal issues, but there was just sort of something about the problem solving abilities that therapists have, that if I could combine that with traditional sports psychology, that I would either solve my problems and play professional golf, or I would have a career. And so I went and got a master's degree, then spent 2 years getting licensed after my master's. So I'm technically a licensed therapist, never practiced. Once I got my license, I quit my job and flew to Arizona and started building up my golf practice. And I did that for about a couple of years until I met a poker player on the golf course who saw the parallels, immediately. And for me, I saw this huge wide open runway to enter an industry where there was nobody doing what I'm doing. Whereas in golf, it was fairly ubiquitous at that point. This is several years after Tiger kind of brought a whole nother, kind of level of that. And so it was kind of ironic because at the time that I met this poker player, my golf game had actually, kind of jumped. I started playing some professional events, but it's a bit of a gamble. I mean, you're putting in multiple 6 figures to try to make it on tour, and so ironically, being a poker mental game coach was a far safer bet at that point.
Yeah. I think that's really cool to have the background between all of them. So I do have a question for you. You brought up therapy and personal issues and strengths and weaknesses. So my question for you is, how much do you think our personal strengths and weaknesses in the real world, our personal lives, outside of trading, golf, or poker, how much of those come into the game itself?
It depends. If you're a newer trader, they come in a lot because you're not good enough as a trader, as a poker player, as a golfer to be able to distinguish your own personal issues from your performance-based issues in those endeavors. As you get better, right, I'd say kind of north of a year, 2 to 3 years of trading or playing poker, that's when you can start to become good enough at this thing to create your own, kind of issues that are kind of more endemic to that endeavor. But, I would say that 95% of clients that come to me initially were working on the performance-based problems that are, specific to that industry. It's nothing personal. Oftentimes, as we get kind of like 2 or 3 years into working together, if they stick around that long or they come back after a while and they're like, hey, I'm struggling with this, can't seem to lick it. And then all of a sudden we kind of find out like, okay, well, this issue actually exists in multiple places in your life. And so you can kind of do some cross training. Other times it's actually like the act of trading starts to kind of bring out some of those deeper issues. And that oftentimes can happen after you've had a bunch of success, right? Because sometimes early on, you're so laser focused on kind of making it, whatever that means for you. Mm-hmm. It could mean actually being able to trade full time. It could mean, making $1 million or having $1 million net worth or $1 million account balance. Whatever it is for you, you kind of are laser focused on that. And then after you have a bunch of success, that's when some of our unresolved personal issues can come out. But that's, again, not the main feature. It's certainly not what the book talks about. It's sort of a, kind of an ancillary thing that I think is important for people to be aware of, so that if you're problem solving and you get stuck and you're like, well, the book's not really helping me. Well, maybe the last section of the last chapter, which talks about this intersection between personal issues and performance, maybe where you need to look.
Well, so you just brought up an interesting point in terms of beginner traders versus people that are more seasoned. So you see this come up a little bit more with people who are newer traders because they haven't really quite mastered strategy or performance and like an understanding of the market. So some of their issues may be more rooted in what they're bringing into the game versus.
Yeah, I mean, we're always trying to figure out, are you bringing in biases from your past kind of personal experience or your past performance experience? So sometimes it's issues that, emerged in school, right? You're the perfectionist and have to get straight A's and you have to do everything perfectly. But then, the market could, doesn't really care, that you're seeking that. Or, you could be the half-assed procrastinator who,
me.
I'm a reformed one as well. And unable to kind of fully materialize your skill set, you kind of come in to trading and realize, you're not able to kind of get over the hump and you're looking for money a little bit too easily and not really doing that extra hard work.
Yeah, I think that was definitely something that I dealt with quite a bit because in college and school, I was always the one who would do my assignments at the final moment and I would manage to ace it. Every single time. I'm talking like finals, midterms. I would study the night before. I would write my paper that morning and I would manage to get by. And, your brain kind of rewards you for being able to experience that and says, you can do that and succeed wherever you go. And when I got to trading, it was a really cold, harsh reality of like, no, you can't half-ass your trading plan. Like you have to have a system if you want to be more consistent, if you want to be steady, if you want to be profitable. So it's definitely been shining a light on some of the flaws and things that I've carried through the rest of my life.
For sure. The other thing I want to mention too about, newer traders as well. And I talk about this in the book in a couple of spots where early on you can have, fear or other kind of performance-based issues, in particular anger. And really the problem is you're actually not good enough yet, right? Like there's excessive levels of doubt. And so there's hesitation entering positions. Mm-hmm. It has nothing to do with there being some kind of inherent bias that you're bringing in. It's that there's actually still too many questions in the back of your mind. So, one of the clients who I feature at the beginning of the fear chapter, his whole perspective changed when I said, for you right now, trading is 90% technical and 10% mental. And he spent the time answering all of the questions. All of the doubt was actually legitimate. Mm. On the flip side, you can have instances where you get pissed off and angry because you're losing, but the anger is not coming out of an inherent flaw, right? You're not like trying to control the market. You're not, forcing results. It's actually coming because you aren't good enough yet. You don't know why you're losing and you're frustrated because you have an idea of what you want, but you're not quite able to materialize it yet.
Yeah, that makes sense. I think that's a great distinction of, are my emotions coming from the fact that I just don't know enough about the market yet? Or is it, I've honed in on my technical skills, I'm doing a great job, but that's the one area that I'm struggling with.
Yeah.
And so you talk about mapping your patterns. And I love this because you've compared it to when we look at a chart and we look at different indicators, we look at different signals, we look for different patterns, and we try to determine, do I buy, do I sell, do I hold? We can do the same thing with our emotions by mapping our patterns. So walk me through that.
Yeah. So the good thing is that our problems happen very consistently in the same kinds of ways. And so again, like you're charting, opportunities in the market, you can do the same thing for your emotions. And so it's not just your emotions that you're trying to map. You're trying to map the nuances and the details that emerge around them. So you're looking at the specific thoughts that come to mind, the situations where these things happen. And what I would say is actually for those that are looking to do this immediately, focus on your mistakes, right? Your mistakes are the things you're trying to get rid of. And it's certainly the recurring mistakes, the ones that are kind of the most frustrating that you can't stop yourself from doing them. Focus on those spots, right? So situations where they occur, the thoughts that come to mind as they occur, or soon after, or soon before, or just before. Particular physical tells, right? Like maybe there's you're squeezing the mouse really hard, or you can feel tension in your head. Maybe you're kind of zoomed in, only focused on, a couple of charts. The changes in your decision-making process, right? Maybe you're kind of convincing yourself that, there's a level here when there's actually not. Maybe you're convincing yourself that 4 or 5 criteria is enough to actually jump in when that's probably not the case. So changes in your decision-making, changes in your perception of the market. Basically a lot of the BS that we kind of convince ourselves of.
Absolutely.
If you write all that stuff down, you start to create kind of a profile of those situations. And, don't take one instance as being kind of the gospel for that spot. But, as you continue to do this, easiest way is just keep a notepad next to you as you're kind of going through your day and recognizing certain kind of mental and emotional noise that you don't think is, should be there. The biggest mistake that traders make is they say, well, it shouldn't be there. And so let's just kind of block it out,
Ignore it,
and disregard it and ignore it.
Mm-hmm.
Yeah. Versus treating it as a legitimate part of your experience. And it's there as a signal for a deeper problem. Now, we haven't gotten to this part yet, but, as you're mapping your pattern, you begin to get to a point where you can actually understand why those reactions are occurring. And, from a performance standpoint, they're occurring because there are underlying flaws, biases, illusions like, hindsight bias, the illusion of control, the illusion of emotional control, right? Expecting yourself to always be in control of your emotions. These kinds of flaws are why you're reacting this way, right? And so the mapping of your pattern gives you the opportunity to do something different, right? Just like if you didn't, as a newer trader and you're looking at charts, you don't even know where the opportunities are, right? You develop enough competency, you can start to see where they are. That's what you're doing emotionally, right? And that's where those opportunities start to emerge once you've done that work.
Yeah, and I think a lot of traders tend to fall into a cycle of constantly repeating the same patterns and mistakes, and they know that they're doing them, but I think it's sort of this out of sight, out of mind. I can run from my problems. It's sort of somebody who's on a diet and who they're, logging all of their calories, but every time they go in the pantry and take a few chips, those calories don't count. Or, it's all the little things throughout the day that actually add up. And you can pretend like they're not happening, but that doesn't take care of the problem. So I do love the idea of, really taking the time to address your issues, your repeat mistakes. Why are you revenge trading? Why are you over trading? Why are you taking setups that are not ideal, that don't fit your standards, that don't fit your plan?
That's a big one for people in the combine. Right? You're trying to actually become, a funded trader, and you're trying to go through these combines, right? A lot of times, they'll get into a spot where it feels like it's okay to kind of gamble, right? It's okay to have, the bag of Doritos because it doesn't count right now, but you have to gain control at some point. And so, if you just keep kind of phoning it in, it's kind of like taking a mulligan. One of the things I train my junior golfers on at a very young age is to never take a mulligan, because it trains your mind to have this kind of out. It's like, it's okay that I hit a poor shot here, right? It's not okay that you're blowing out of this combine again, right? You have to learn how to be in control when it matters, and that still is the case, even if you're the odds of success are very low.
Well, so I have a question for you. In terms of mapping your patterns, say you have a plethora of issues that come up. How do you, because I think one issue is sometimes we want to fix everything at once and we get overwhelmed by it. How many issues should you focus on at a time? Is it picking one? Is it picking a couple?
If this is brand new to you, I would say start with one.
Okay.
Right, because then the system that I outline in the book is a skill in itself, right? This is the teaching people how to fish, not giving them fish.
Mm-hmm.
So once you are able to kind of go through the process with one problem, it gets so much easier to then kind of scale in and add 2 or 3 after that. If you don't have one that is like, a clear number one, and you've got 2 or 3 that are close, throw something at a dartboard and just pick one. I mean, I think if you try to do too much at once, the biggest thing you risk is not being able to kind of get over the hump where in real time you are able to functionally react differently, to make different decisions. We're dealing with some limitations of the mind, right? The mind has a limited capacity for how much it can think about at one time, and the emotional system has the power to shut down higher brain function, including thinking, planning, and actually emotional control. So you're dealing with some limitations that if you layer on too much at once, your odds of success are low. And then what happens, if you fail at trying to make progress, do you lose confidence in a system that will work? I mean, this thing has been tried and tested, across multiple industries, right? We can add in esports as well. I've worked with doctors, I've worked with lawyers, worked with one of the number one pool players in the world. This system will work if you kind of work the system in the right way.
And I think it also comes back down to like, if everything is a priority, nothing is a priority, right? So if we are trying to, nix the buying at the top and chasing and cutting too early and revenge trading and somebody, I think it was actually Shark, he suggested to, that's a former gas shark trader,
Mm-hmm.
some of his followers that they go back and they look at like their last 30 trades and they make note of exactly what went wrong with each of them. Find the one glaring problem, like what is your one critical flaw that you keep falling into, and then spend the next month and only focus on that. Only focus on that single one, because again, if you try to do all of it at once, you're just going to set yourself back further, get discouraged by the process.
Yeah, and one thing you can do also is you can either pick like the one that you think is the easiest to try to solve, because it will give you a chance to have some success in going through the full arc of the process. Or if you can see kind of some order to this, like sometimes, right, overconfidence precedes mistakes that cause a big drawdown, which then causes, revenge trading and then desperation, right? So if you can focus on, let's say, the overconfidence and then actually able to make progress with it, then you reduce the chances that, problems kind of downstream, will go away. So, if you're going to focus on one, try to focus on the one that's going to give you the biggest bang for your buck at that point.
Yeah, I like that. And I know that there's 2 words that get thrown around a lot in the trading world. One is greed, the other is fear. So let's talk about greed, because I think you have a thought process that there are some misconceptions behind the word.
Yeah, we all know the famous quote from Wall Street. I think it's, for lack of a better word, greed is good, right? The better word is ambition. And that to me is the key distinction. No one would ever say that Michael Jordan, Roger Federer were greedy. That's just, so your job is to make money. So why would it be greedy to try to make money? That's your version of success. It doesn't make any sense. So I think we're kind of caught in this world where, societally, right, there's how much greed is enough, right? That's a different, kind of conversation, one that I separate from performance. As a trader, you are a performer, and as a performer, greed is a problem because it costs you money. That's why it's a problem. So what are the impulses? What are the reasons why you're going to get greedy? Well, it could be overconfidence. It could be anger. It could be fear. It could be lack of confidence. So to me, greed doesn't really exist in the way that we typically think it does. And all of the underlying flaws that produce greed are actually related to those other 4 issues. And so we can then just kind of focus on those 4. Greed becomes irrelevant, except maybe on the surface as like a signal, right? So the client I referenced in the book, he recognized when he began to think about the utility of P&L, right? The monetary value, not the actual, percentage or the P&L as it related to his account. That's when he started to get greedy. So we can look at it as like the first signal could be greed, but like the problem solving features that you need to go through, or the problem solving process that you need to go through to actually be able to solve it, relates to all those other 4 issues.
I like that. I like that you're taking, sort of the negative connotation off of that word. Because it's true. I mean, ambition is really just a different approach. We're trading because, Trent just said, society has blurred the lines between wanting to do better for yourself and family and greed in a negative sense. And I think that's very true. Very true. The other one I want to touch on is fear. And this is a big one because, a big part of being a successful trader or, a long-term trader is being able to accept uncertainty within the market. And at the same time, uncertainty can be a breeding ground for fear. So how do you navigate the two? How do you go, you know what, I accept the uncertainty. I know that this is a part of the game, but I'm going to embrace it while also keeping the fear aspect at bay.
So there are reasons why you can't accept it, right? And so we have to peel back the layers to understand why you're not accepting that inherent kind of nature of it. Now, is it because you have perfectionistic tendencies and in all other aspects of your life, you are able to be in more command? And so the idea of being uncertain about something to you is very threatening. It means that you're stupid. It means that you don't know something that you're supposed to know. It's embarrassing. It's a threat to your goals, right? There's all these things that kind of spring out of uncertainty, but it's all about your perception. So we have to kind of understand what those flaws are that are forcing your perception to look at uncertainty as a threat, as something negative, versus seeing it as a fundamental, kind of component to this game.
One thing that kind of works with me in regards to uncertainty and embracing it is the fact that it can be exciting. I think a big part of trading is I can go in and make X amount one day, maybe lose a little bit the next day, make twice what I made on my good day that week the following day. Part of uncertainty, it's not always a negative thing. It's a matter of I could make this much this day, which could far exceed anything that would be like a standard paycheck or a corporate job. Or, a big part of that for me was working in the restaurant industry going through college. I loved opening the checkbook at the end once the guests were gone and being like, okay, is it 20%? Oh, they took care of me good today. Like, got a regular that threw me $100. And that excitement and that uncertainty, I think, carries over into trading. And that, yes, you don't know what's going to happen. But, as long as you have a trading plan and a system and you're not going totally rogue, the positive side of uncertainty is definitely a factor as well.
Yeah, fantastic points. There's actually a Twilight Zone episode that I reference to a lot of clients who struggle with this. It's called A Nice Place to Live. If you want to look it up, you can Google and watch I'm going to spoiler alert here if you want to watch it. But the long and short of it, and I'll be very, very brief, this robber gets killed and goes to what he thinks is heaven, right? He's in this mansion. He has all the money he wants. He goes to the casino. He wins every hand of blackjack. He pulls the slot machine. He's got booze. He's got women. He's got whatever he wants, right? And you sort of flash forward to about a week or 2 or 3 later, and all of a sudden it's just meaningless now. It's nothing. It's like it's too easy. There's no chase. There's no excitement, and it turns out he's in hell.
Ooh, I love that. Because you know what? We always we want the ups. We want the green, great day after great day after great day. But really, it's the ebbs and the flows. It's the ups and the downs. That's what allows the green days to hit the spot.
It's the process. It's the feeling like you have some command and control in your results, in your process. And if there is absolute certainty, you will hate it. Right? There's no growth. There's no growth when there's certainty.
That is so true. That was a good one. Yeah. Yeah. It's really the ups and downs that allow us to value the good days and without the struggle. Trent, so much profound wisdom in the comments. without the struggle, there can be no progress.
Exactly. You don't make mistakes, you're not learning. We can wax all night.
No. One of my mentors, Radio, actually says, I either win or I learn. And I think that also puts a really positive connotation on the whole experience, because as long as you're not repeating the same things over and over again, it's a new opportunity to take that wisdom into the next trading day and change up your game.
And I will say, for those of you who are making the repetitive mistakes, at this point, make the assumption that it's probably something mental or emotional. The bottom line is, like, if you're making repetitive mistakes, you actually don't know why it's happening. And that's the whole point, right? So you're thinking that you know why it's happening and you don't. And that's actually the problem. The problem is not that you're revenge trading, not that you're over trading, right? Not that you're getting out, prematurely. It's that you think that you understand the problem and you don't. That's the problem. So spend more time studying it, working through it, and assume that there's probably something mental or emotional there to work through. And again, it could be something technical too. I'm not going to discount that, but repetitive mistakes always happen because there's something you don't understand.
And so taking the time to map out your patterns and actually get in touch with what those issues are will allow you to tackle.
It's the first step. First step, yeah. Yeah, because you can't solve a problem you can't see, right? And you can't solve a problem you don't understand, at least not reliably, right? You could get lucky, and people do, but to do it reliably, means that you got to do some work.
And you can't run from the problem, because then it'll just continue to happen. I do want to talk about accumulated emotions.
Favorite topic.
Yes, and I think this is relevant because I've had so many traders that'll tell me, whether it's a specific ticker or a market, like, oh, DPW, every time I take that trade, it screws me over. Or, small caps, I just can't stand small caps. Every time I try to trade one, the volatility, it's a mess. It's not for me. Or, I try to size up, and every time I do that, I get burned. How do you take negative experiences that have built up over time and sort of avoid keeping them from turning into a self-fulfilling prophecy? Because if I try to go into this ticker again and I'm instantly in there thinking, this isn't going to work. I know this is going to work. It's stupid that I'm even doing this, but I'm going to take it anyways. I feel like there's a bit of a self-fulfilling prophecy that takes place in how you take that trade.
It's not self-fulfilling. It's that your mind is actually altered, right? Your perception has now narrowed in such a way that you're actually not seeing things in an unbiased, objective manner. Mm-hmm. So a big part of it is actually removing the old emotion, right? The reason that you have this perspective is because you're making the assumption that what has happened in the past is going to continue to happen in the future, which, every financial waiver you see always includes past performance is not indicative of future results. So again, we can kind of know all this, kind of logically, but then emotionally, we can be overly attached to past pain, to past failure, to past mistakes, to past losses, and to be able to be more objective in the present, right? In this trade, you have to be able to have that emotion be resolved and be taken care of. So there's a process in the book I call mental hand history. It comes from my work with poker. We're not going to get into the title. I'm not great at coming up with titles, but the point is, like, the tool is very effective. It's very simple, and it will help you to break those emotional bonds, because memory is not supposed to be stored that way, right? So when you think back to a trade from a year ago that you can't believe how stupid you were, that you didn't know X, and you didn't get out at this point, whatever, right? Whatever. The emotion is still active, right? It's as if it just happened. So now, you talk about accumulated emotion. You're not starting with an empty cup, right? Like at the beginning of the day, or as soon as this particular, symbol or market pops up, all of that old emotion kind of gets dumped, and you're flooded. You're not reacting, objectively. So you have to go back and surgically look at those past pain points and fix them, because otherwise the emotion is, going to override your logic, your ability to think logically and make reasoned decisions. And it's not self-fulfilling. There's research that shows that people who think that they're unlucky, right, their world narrows, right? People who think that they are lucky, their world widens. So they are naturally, getting into more opportunities, getting into less opportunities. It's not self-fulfilling in a prognostication kind of way.
Sure.
It's self-fulfilling because the data set with which you're working from has been skewed or biased.
Interesting. Yeah, I mean, I hear that all the time, people who are hesitant to take certain trades and touch certain markets. And I think there's got to be a better approach to navigating that.
Yeah. And sometimes it's laziness. Sometimes it's overconfidence. Mm-hmm. Sometimes it's a bit of like a perfectionistic control, right? Like you want to have control. So sometimes control comes from thinking you know what's going to happen in the future. Sure.
And guys, we are going to get to the Q&A here in just a few minutes. So go ahead and load the chat up with those questions. Hit the like button. We'll get there soon. So I want to touch on revenge trading really quickly, because this is something that I see comes up a lot for people. And, it's this thought that you've had one bad trade, it's turned into another bad trade, and you sort of start to negotiate with yourself on your system and your plan and what kind of trades you take, thinking like, if I just get that one and it turns out properly, it'll cancel out all the other bad trades I had. And then I'll be a rule follower again. And then I'll be back on my A game. And that just doesn't work. What are the, how do you break the cycle of that messy domino effect?
It's complicated. I mean, I think, we were talking earlier about procrastination. In some way, like, you are procrastinating at that time. It goes back to the combine analogy I was giving earlier, right? Like, you're looking for an escape hatch out of this particular situation, right? Versus, no, you don't get a mulligan, right? You have to play from behind the trees, right? And learn how to get out of it. That's the point, is like, you have to learn how to get out of those situations. Mm-hmm. So on the larger picture, you have to be able to want to do that. Now, in the moment, it's really freaking hard, especially if it's not something you've done before. So on some level, we can look at that as being mentally weak in that spot, right? As if it's a muscle, right, that hasn't been trained. And so what's going to happen, right? Most of the time early on, you're going to get run over, and the natural course of that momentum, the momentum of that pattern is going to run its course, and you're going to blow out of it, and you're going to keep, kind of firing until you get out, or until your account gets shut off. Mm-hmm. That's okay, right? Because while you're going through it, you're going to become more aware. You're going to try out different things, right? Different pieces of logic, different understandings. You're going to gather more information. All of that's going to kind of feed into the system, help you to become more aware earlier, right? Because a big part of what we haven't gotten into is, right, the emotional system has this power to shut down higher brain function. The mapping of your pattern really seeks to identify those early warning signs, so you can start to take action before your emotions have kind of hijacked or caused your mind to malfunction. So to cure the revenge trading, sometimes you actually have to start working consistently after you've lost one trade. Even if you haven't then kind of clicked into revenge, you're practicing, right? You're building up the muscle. You're getting the reps to train your mind to think in a particular way when you're in a position of strength, not trying to do it when it's at its hardest moment, where you're like, going to the gym trying to bench press, 250 pounds when you can only bench press 40. It's like, it's just not going to happen. So,
right.
Put up the 40, do it, get stronger. And then, over time you can kind of develop more of that discipline.
Right. Because I think trying to tackle that issue head on as it's happening is so difficult, because I don't know how many of you guys experience this, but when I break my own rules, I'm not sitting there logically thinking about it step by step. My fingers just clicking and I'm taking the trade that I know I'm not supposed to take. It's all into motion. It's all gone into motion before I've even had a chance to truly process it. So you're saying you got to start ahead of time, and you got to start training that muscle memory and learning your triggers and knowing when you're about to head that direction so that you can nip it in the bud before you've already taken that trade.
Yeah, exactly. And so you're a swing trader, right? So you're not getting in instantaneously, right? You're going to get a signal, and the signal is going to say, all right, start paying attention. Mm-hmm. That's all I'm saying. So when you start paying attention, right, now it's bring back, right, some of the nuances and the understandings of your problem into those moments, right? At all other times, if you're not getting that signal, then cool, right? The threat of revenge trading is very low. We're not going to waste mental bandwidth trying to defend against it. which is how you ultimately want to be, whether it's revenge trading or anything else. You want to have pure focus on the markets so you can be able to trade the best you can.
Mm-hmm.
But when you get the signal that says, hey, you better start paying attention, otherwise some bad things are likely to happen, right? Because the risk is now been greater, that the calculus has changed, right? And so if you start to pay attention at that time, you start training your mind to think in the right way, to understand what happens next. And then maybe you have, some built-in kill switches, right? So in the interim, right, it's better for you to stand up and walk away. And even if you come back 5 minutes later and still smash that trade, you still did something differently, right?
I like that.
And that can be the beginnings of changing the momentum of this pattern.
Yeah, I like that a lot. Well, speaking of stepping up and walking away for 5 minutes, I have a question for you, and then we'll head on to the Q&A. Traders experiencing burnout. When is it time to take a step back? When is it, is it having poor performance day after day after day, being emotionally fogged up, not performing your best? What are some cues that, it's okay to take a step back? Because trading, and I think you mentioned this, it's not like a corporate job where you're getting paid based on what you're making that day. Trading is very intense and focused, and you're dealing with money. It's
Your money.
Your money. It's a big trading day. Not everybody trades the full day. Some people like power hour and the beginning of the day, and that's it. But a lot of people are focused all day, and it can be very exhausting. What are some steps that it's okay to take a breather, shut the computer down for the day, step off, and for how long?
I mean, I think first and foremost, you want to begin thinking of yourself like an athlete, like a performer who needs to be in good condition, right? Mentally, emotionally, physically, right? So if you start treating yourself that way, you're going to start to see how frequently you're actually underperforming relative to your ideal. Mm-hmm. And that can give you some clues as to when you're getting, a bit more burned out. But I think, we take a bigger step back and say, hey, can you actually think more proactively and look at creating cycles within your trading, especially if, you've seen that there are certain periods in the year where you are operating better, or certain times of day, where you're making more money than others, right? Look to try to peak for those times. That's what athletes do. They're not trading. I would say they're not competing for a day, typically. So that's number one. Number two is understand, some of those big signals of burnout for you, right? Again, you can kind of map burnout like you map anything else. And for some traders, it's, when they feel like the last thing they want to do is trade, but they feel like they have to. That's generally an indication where it's time to take a step back. Mm-hmm. And for how long? I mean, if we're thinking preventatively, and this is going to shock some people, I think you need to take 1 day off a month, and then 5 days off, so an entire week off per quarter. Most traders take 1 week off per year, not 4 weeks.
That even sounds like so much, I think is a sign that we need those breaks more often than we think, because
you don't realize how deep of a deficit you're running and how marginally compromised you are. And the math actually starts to line up. If you are performing at your best for more times out of the year, you make X amount more, and that X amount more usually covers the 5 days off. Not to mention, you just have a lot more fun because you're doing something else besides trading. And then when you're trading, you're actually trading better and enjoying it. It's like everything 100%. Works well.
No, I think that's great advice. All right, let's move on to some of the questions in the chat. Let's see what we've got here. All right, here's a good one. So from Poker Income, how to make yourself stay in a trade until you hit your profit target and not take profit too soon for fear of losing some back.
Yeah, so you gotta dig into that fear of losing and understand what's causing it, right? Because clearly there is some flaw, right? Because what your profit target is, that you should stay there. So is it the fear of making a mistake, right? Like if you should have known that you should have exited at that point, right? It feels like a mistake. Does it feel like some failure on your part in terms of maybe an expectation of perfection? That if you're not making any money in this trade, right? So it becomes more kind of monetary based rather than execution based, which is, I think, really where traders, kind of get it wrong in the short term, right? Trade by trade, sometimes day by day, your focus is on execution, right? Not the results, right? The results in the short term provide such false feedback that you really are not getting an accurate representation of how you're doing, right? So one of the techniques I talk about in the book is called an A to C game analysis, which is kind of like mapping, but it's more about performance mapping than problem mapping. And so when you can recognize that you are trading well, right, sometimes that can be a way that you can get past that fear of losing, because you know that that it's ultimately about the decision making and the execution that you're trying to subscribe to, abide by. And if not, then it means that your system has to change, right? So again, a lot of times the fear of losing is really about, what does the losing represent, right? And if you can start to understand where the biases and flaws are there, it's a bit easier to get more process and quality focused.
Well, and I think you just touched on this next question from Trent, who said, Jared, what's more important, producing a profit or practicing the mechanics that will produce the profits long term?
So time frame.
At that daily number, the daily greens, are we looking at, is this sustainable long term? What does it look like over time?
Yeah, I mean, it's a time frame question, right? So what's more important today? It's the mechanics that produce profits long term. What's more important, weekly, monthly, quarterly? It's the profits. I mean, right? This is a profit driven game, right? We're not going to just, we're not getting participatory rewards here, right? And no elite athlete does either. And so, no, like money matters, but not in the day to day, or not in the execution.
Right. Sunday has a question for us. So she's asking basically about the sleep aspect and sleep schedule, and how does it play a role, and are there any good tips and advice?
I mean, I'm not a sleep expert, but I can tell you that one of the big problems that people have when it comes to getting good sleep is they're not shutting off from technology early enough, number one. Number two, they're going to bed with a ton of stuff on their mind. It's something I call a bloated brain. It's a topic in the troubleshooting chapter. And basically what it means is that you're putting too much responsibility on your mind to kind of digest all of the stuff that you've absorbed from the day, right? So you're thinking about some past trades, you're thinking about what's happening tomorrow, right? There's all this stuff that's kind of happening when it really actually should happen, in writing form. So ideally, think of a cool down process that would happen at the end of the trading day that gives you sufficient break so that your mind actually has time to kind of steadily work itself down. If you don't do that, and then you go off and you go get a workout in, you go maybe have some dinner, you hang out with some friends, whatever, all of a sudden now that work is then kind of springs to life, right as you're kind of starting to wind down and go to sleep, and like it's just inopportune time. So then you sleep poorly, or you're exhausted, and then you wake up after 5.5 or 6 hours because all that stuff is now kind of on your mind, and now you wake up with new thoughts and new insights, which is cool. But and then you're going to be tired. So I think the term is sleep hygiene. It's really just about having a routine that helps you to kind of decompress from the day and not constantly be absorbing more and more data, which is what a lot of people end up doing, right? They spend too much time on social media and their phones, and it's just consumption. It's
nonstop.
And then the brain is not able to kind of like actually settle down and reset itself.
Well, and so I love that you said to write it out, process your thoughts, kind of unload a little bit by putting pen to paper, because that's another thing for me. I actually just ordered a whiteboard. Like, I'm going back to the basics, old school, because everything is so digital these days. It's overwhelming, between trading or regular full-time jobs, if you work another job, smartphones, texting, having a little computer by our sides all day, every day, that a lot of us, I don't know if you guys do, but you should admit it if you do, actually take your phones to bed, which is awful, and I'm guilty of it myself a lot of times. But sort of taking a step back from the tech and putting pen to paper and kind of processing your thoughts in a way that's non-digital, it really, I think it alleviates and like relieves that brain space.
So
And
for me personally, when I'm writing by handwriting, I'm far better able to brainstorm in a broader way, right? I generate new insights. It's rare that I generate new insights when I'm typing,
same.
but I might like elaborate and create like a next level of something. But the real innovation comes when my mind is kind of a bit wider, and so handwriting is helpful for that. But once I have an idea or something that I really want to kind of pour through, my handwriting is too slow. I need to type it out so I can, kind of rip through and, have my hands keep up with my brain.
Mm-hmm. Yeah, no, I think you're spot on. I think there's just something that happens digitally that is not the same as putting pen to paper. I do have another question, and it is, how can you get ready, let's say 20 minutes before trading, to execute at a higher level? Is there, a daily regimen or a routine or something that can just sort of get you prepped for the day before you hit the markets?
Yeah. So let's put aside any that you didn't just wake up 20 minutes before the market started. That there's some kind of non-trading, warm up to the day that you've done.
Sure.
So 20 minutes before, I would spend a majority of it on reviewing past trades or, upcoming things that you're looking at. Effectively like develop 5 to 10 minutes of technical type stuff that's going to kind of help you get ready. Number 2, you're going to review your longer term goals, and also the why that those goals matter. Sometimes it's easy to, lose a little bit of kind of mental strength or discipline in the middle of the day. Sometimes it's easy to lose focus because we kind of lose connection to what we're actually aiming for, right? It's easy, in the first hour because the market is, kind of giving us a lot, but as things, maybe quiet down or opportunities are a little bit less frequent, it's kind of easy for our focus and our attention and our motivation to kind of just waver. So having a reminder of why you're doing this, what you're actually working for, keeping that kind of close to your vest, I think is important. And then number 3, now let's review some, the mental stuff that you need to be aware of. What are the risks for you today? Too often traders go in to their days with rose-colored glasses. Today's a new day. Yesterday's mistakes are in the past, and it's just a problem. I mean, I've talked to so many traders who do this, and they think it's correct, right, to be that optimistic.
Like, is it truly a clean slate, or are you just kind of putting everything behind you? Yeah.
No, you want it to be a clean slate, but you're not. It's not.
Doesn't make one
clean slate. Yeah, exactly. I mean, it's just a fat myth to think that suddenly now you're just going to wake up, the genius or cured of your past ills, and that's not the case at all, right? So instead, be like the Navy SEAL. The Navy SEALs that took down bin Laden. What were they doing in preparation for that? They're thinking about the 40 ways they're going to die. Right? They're not thinking about the going in guns blazing, shooting America's most wanted man. Like, no, they're going in thinking, and all of those 40 scenarios is not what's going to happen, right? The difference for you all is that you're not dealing with a situation as chaotic as that. Mm-hmm. You're dealing with repetitive situations, right? You know what you're going to face, so be freaking prepared for it, not idealistic and optimistic. Optimism is sometimes dangerous. I'm an opportunist, right?
I like that.
Take advantage of what you see and make the most of it. Don't just think it's going to, go away because suddenly you're feeling
new
better.
day. It's a new morning.
Day.
It's a clean slate.
Yeah, cool. It's all watchable.
I love that. That's very real. I'm very big on morning meditation. That has been something that's been new. It's something I've always done, but I'm trying to be more consistent at. I sort of relate it to waking up and having like 50 tabs open in your brain. And when you meditate, at least you can shut down a few of those and go into your day a little bit more clear. But meditation aside, some other things that people talk about and like to incorporate are mantras and positive affirmations and sort of visualization. How do you feel about those being incorporated?
For the most part, they're Band-Aids.
Okay.
Right. Like for me, you don't need any of that stuff for problems that you've already solved, right? Now they can help to kind of encourage you in the direction with which you're learning. But if you look at like the things that you have mastered, you don't need to be reminded of that stuff. So mantras can be helpful, right? If they are actually training something so that you can supersede it eventually. But most often they end up becoming these things that we have to hold on to in order to be able to perform well. And to me, that means that you're now segmenting some of your bandwidth to kind of keep that top of mind. And for the most part, most people, most traders, inadvertently use that as a tool of suppression of their emotions, and try to block that stuff out, which in the short term is correct-ish. But the ideal is to understand the root flaws, the biases, the illusions, understand what the corrections are, and then do what I call injecting logic. Now, injecting logic, I can see how some people often think of that as being a mantra. Here's the difference. You are actually using that phrase to correct the flaw. So you have a hindsight bias. Trying to correct that. You have perfectionism. You try to, like, that's what you're trying to correct. Not just like the mantras tend to be too global and too general. Number two, you train it like it's a skill, right? You're trying to strengthen this idea so that it gets internalized deep enough to correct the flaw to eventually make it obsolete. It's like upgrading a piece of software. It doesn't happen just by going in and rewriting the code. We don't live in the matrix, right? But what we do live in is in you continually do that, right? Much like lift and weight. And eventually, you can bench press 50 pounds, 60 pounds, right? And that's what happens. So when that idea gets trained deep enough, the illusion of control, the hindsight bias, the perfectionism, all that stuff starts to break apart. You are reacting emotionally differently as a result. And ultimately, you can resolve it and have those emotions disappear. Now, it's not your emotions disappear, right? It's that the emotions stop reacting in that situation for that reason. So that's true resolution. And that's why I'm not a big fan of mantras in a global sense, because I think they tend to be, a bit of a cover for the work that's really needed.
Sure. Yeah. And I think that's an important differentiation, because I think there are some people who think, I meditate, I say positive things, and that's without really truly addressing what's beneath the surface. And I think perhaps you can pair things together, but if you're not doing the real work, then it's not really working.
Band-Aids.
Yeah, Band-Aids. I like it. We've got some great feedback from the chat. Got some good stuff going on here. I think, we have any last final questions, or are we all set? We did address this about Jared and the mechanics of, long-term execution versus daily profits. I have one last question for you that I think really ambitious people actually struggle with a lot. And that's, in a regular career, or that's through trading. When you're first starting out and you have firsts, like, I got my first raise, I got my first promotion, I hit this goal, and you have this like sense of excitement with each one. And then eventually you reach a point where, what you're making could be so much more than you would have ever imagined, but that spark and that satisfaction and that maybe joy that stems from it just isn't there anymore. The goal is constantly this moving target, but it just never satisfies to hit it anymore. What are your thoughts on that?
I mean, Daniel Pink is a good man to review in this regard. He wrote a book called Drive. So, like, at a certain point, right, money stops to be becoming like the primary motivator. Now, that's not true for everybody, right? You've got the billionaires out there who are incredibly money hungry. Yeah, there was one more, and that's they're the Jordans of the world. Not everybody's cut from that cloth.
Sure.
So for others, right, where does the motivation come from? It comes from quality. It comes from growth. It comes from learning. It comes from the challenge. It comes from the competition. It comes from maybe what the utility of what it could produce, and maybe some altruistic pursuits. Maybe it's just the desire for your own version of greatness. I think what you've got to start to do is almost like kind of diversify out the things that motivate you, because if money is no longer the carrot that's going to drive you, you just got to be a bit more introspective about the things that really matter to you. And sometimes asking those types of questions, like, why do I care about this? see where it takes you. I mean, it might mean that in the short term, you're going to kind of be a little bit like kind of sideways, almost like a sideways moving stock, right? That's just not going anywhere. And that's okay, right? As long as you're researching and trying to understand, the energy behind that may not be showing up in the price action, but it will eventually, right? And that eventually you find that kind of the why, and, things can start to click.
That's interesting, because I do feel like there's a difference between newer traders versus more seasoned ones who have been doing it for a long time. A lot of the newer traders do think it is the monetary aspect that is going to bring me joy and fulfillment and satisfaction. The ones who've been doing it a long time are saying, listen, I'm telling you, like, been there, done that. It's not about the money. It's about the freedom that comes with it. It's about the extra time I get to spend with my family. It's about being able to travel and not be cooped up in an office. So sort of maybe even not anticipating that the financial goals are going to satisfy and check all of your boxes. There has to be more outside of that.
Yeah. Yeah. I mean, I'd say the majority of the traders that I've worked with that are, probably, 10 to 15 years plus, the ones that are still around are describing, kind of what you just said. I'd say the other ones are just a pure love of it. I mean, they love trading.
Mm-hmm.
I'm not saying that they would do it if they weren't getting paid, but they certainly are getting paid a lot more than what they need to kind of scratch that itch,
Sure.
Because they just love the dynamics of the market. They love the intellectual challenge. They love the idea of trying to outmaneuver, especially some of the bigger, options traders that have the ability to move markets. I mean, it's just fun for them. It's like they're competing. So it's to be able to kind of move past money in that regard. I think, I'm not saying it makes you a more dynamic person. I'm just saying that some people are more dynamic and they're not necessarily appreciating that. And they're trying to kind of force themselves, into a single pointed focus that does not capture the full scope of what drives them.
Sure. All right, Jared. Well, this was fantastic. Like I said, I just love your different take on using emotions as signals instead of trying to avoid them, treat them like they don't exist, which gets us to double down on them. It just doesn't work. So I do want to thank you for coming on. We had a lot of great topics and questions, and this has been super insightful.
Yeah, thanks, Wing. It's a lot of fun and great to speak with you.
All right. Appreciate it. Take care.
Thanks. You too.
All right, everyone. You are still tuned in. This is Jared's book, The Mental Game of Trading. I've just started it. I'm about halfway through. And it definitely gives you a new approach to the emotions that you're seeing consistently, how to tackle them, what they lead to, and mapping your patterns to make sure you're not falling down the same routines that are not working for you. Loved having Jared on. If you're tuned in, please hit the like button. Trent, yes, I do still like TTOO, by the way. I really love anything around that $1 mark. We hit the floor, we reload, and we ride it up again. So yes. But yeah, hit the like button, leave me some comments, let me know what you learned from this episode, let me know what you want to hear on future episodes, and we will continue to get some amazing guests on here. All right, y'all take care.